seem very comfortable. You seem all relaxed.
Just came from a party for the
You spend 30 seconds with me? No. Busy. No one wants free financial advice.
depends.
Wow, you want to know the topic? It's an easy topic.
What's the topic?
Money. You like that? I'm Jill. These stone lions guard the New York Public Library. In the 1930s, the mayor of New York named them patience and fortitude, qualities he thought people needed to weather the financial depression. Let's go find someone who needs financial advice. Fred, what's on your mind? What can I help you with today?
Well, let's see. My 401k.
Ah, the old 401k question. So what's going on? How have you been doing the last few years?
I would think like everybody else, I'm down pretty substantial. I'm probably down about maybe 45-50%.
Ouch.
Yeah, it hurts.
Do you how often do you look at it?
Probably too much. I probably look at it almost every other day.
What?
Yeah.
Do you actually change anything?
No. Once in a blue moon I do on the stock side of it, but that's probably about it. You know, I'm probably better off not looking at it at all and just letting it grow.
All right, so let's do the first thing is you don't have to look at it every day. That's like a little bit overkill. The second thing is, how about getting a game plan together? Is the plan at like a Fidelity or Vanguard? What firm is it with, do you know?
Ladenburg Thalmann.
Okay. There's a whole bunch of choices within there, the plan, but do you have more stocks than bonds? You know what your allocation is?
Yeah, that's probably the problem because I'm a little bit of a risk taker because I figure, I'm still in my 30s, so I could be a little bit of a risk taker. Unfortunately, the last couple of years, it was not that good to be 60% in stock, and that's where I am at 60% stock.
I don't think 60 is so bad, but here's what I'm going to give you some advice. Let's talk about like what you need to do to like retool your allocation. Number one is you got to take a risk assessment questionnaire. It's either on the website of the provider or you can go anywhere online, you take it. It sort of says, you're risky, here's what your allocation should be. Now, I also want you to downgrade your risk a tiny bit because, you're 30, you're healthy.
I'm 38, actually.
38. He's getting a little older. And you know what? You don't get paid that much to take risk. So it's okay to actually put an allocation in place and then say, let me leave it alone. Okay, now, step 2. Got your allocation and your risk tolerance. Now, once a quarter, you're in sales, so you'll be able to do this easily. You know when the quarter ends, right?
Sure, of course.
All right, so once a quarter, you sit down with your allocation, and that's when you look at the statement, or that's when you go online, and you make an adjustment. You rebalance. You say, hey, the stock market's up. I'm no longer 60-40, I'm 65-35. Take 5% from your stocks, pop it into the bonds. And you know what you're going to be forcing yourself to do? You'll be selling high and buying low.
That was pretty smart, right?
That sounds good now. So I think that and don't look at it more than quarterly. The most I would say is monthly, but other than that, you're really going to drive yourself crazy. And then if you have a game plan, every single time you sit down and look at it, you'll feel more confident that I don't need to look at it all the time. Does that make sense?
Oh yeah, it does now. I wish I had that sense not too long ago.
All right, but you know what? It's a whole new ball game. We're almost at 11,000 in the Dow.
Right,
For all I
right.
know, you got a chance now to reallocate, and the market's up. So hopefully you get there. And I want to thank you so much.
Oh, you're very welcome. Thank you very much for your time.
Great. Take
All right,
care.
thank you.
Bye bye.
All right.